All right, hey traders, this is Christian from Tribeca Trade Group, and this is your end of day summary for Monday the 19th. And well, so much for a Turkey Week rally. It doesn't look like that's going to materialize. This market, well, we still have a couple of days left in the week, but certainly the bad news was not taken very well regarding the trade data and so forth. Just more of an excuse to kind of get out of growth names, which is basically what we've been seeing now for a while. But yeah, I mean, I really think that this is basically the pain trade that's going on right now. Someone said the the big analyst over at JP Morgan said that the pain trade would be stocks to go up. I disagree. I think the pain trade is, continuing to see value outperform growth. I think so many people are still long growth. And have kind of got sucked up into that because it worked for so long. Listen, growth versus value worked for a long, long time, and it almost became like muscle memory that just value was just so far out of vogue. But I kind of don't want to spend too much on this today because the whole value versus growth, because I've been talking about this for weeks now, and now I see almost every person that comes on CNBC or Bloomberg is talking about this now. And I was on Bloomberg about 3 weeks ago talking about value, and I didn't get that much. People were not that receptive 3 weeks ago, but now everybody is all about value versus growth. So it just is what it is. People, the panel that I was on were like, really? Value, this hasn't worked. And I said, if you look at the underlying charts of some of these names, like the Coca-Cola, and at the time it was before Walmart reported earnings, but I said Walmart, Coca-Cola, and Pepsi, and those names have certainly outperformed. I mean, these charts are crazy, and so what makes this really tough right now? These things have blown out to the upside, so I cannot personally get long up here Coca-Cola after it's way overbought. Same thing with Pepsi. We've been talking about these names for the last couple of weeks in the trading room. Here was your breakout in Pepsi. I think Pepsi, you had a chance to kind of hang with it, but it has, even though, you see a big green candle today, only up a 0.5%, but you could have been hiding out in these places. Walmart, by the way, the third one, which I had mentioned, which has fallen apart since its reported earnings, now down 6 days. I took a shot at this at the end of the day. Something that is not growth. Taking a shot at something that's not growth, that's just into the 50-day moving average. I just think it's a little bit oversold. I would have liked to see it in a perfect world bounce. Someone asked me today, why'd you go long Walmart at the end of the day? It's really not showing anything that great technically. Yes, true, but I think 6 days in a row is kind of enough for a name that I thought had pretty good earnings. So that's the case for that. But yeah, I mean, this has been going on, and it could still carry. I think it's a little bit overbought right now, the value versus growth. I think you really want to pay attention to what name and whether or not you actually want to be in that for you like the name rather than just playing the theme right now. But clearly that has gotten above all the short-term moving averages. You got the 50-day moving average crossing over the 100. By the way, this is IWD versus IWF. I think I have the small cap one in here too. But again, I'm going to gravitate away from this because I've been spending a lot of time. If you've been watching my videos, I've been literally talking about this now for weeks. Let's see if I have the other one. That would be IWO, IWN, IWO. This is small caps. Let's just see what this one looks like. So the first one that I looked at, the one that was just on the screen, was large cap growth versus value. This is small cap growth versus value, IWN versus IWO. So that's also moving. A couple other relationship charts to look at before we dig into some things. I like what Michael Santoli had to say about credit spreads. So I still have that up. I do still have credit spreads have been moving pretty decently from. I mean, granted, they just if you look at this 5-year chart. They got as narrow as basically breakout territory in terms of HYG versus TLT. So I think this is normalizing right now. It's coming back to where it was. Back in this range. There's no reason why high yield has to be outperform TLT that much, but there is, what this is showing basically is, a little bit of a move towards a safe flight to safety and away from credit risk. And I was actually quoted today in Bloomberg for one of their articles on that. But yeah, I mean, this is so. I talk about this occasionally. If you're not a Tribeca Trade Group subscriber, these are the types of things, value that you get. I put this report out every weekend, and sometimes I put it out publicly, but I want to kind of shy away from that because I do spend an awful lot of time on this. But it really gives you a good heads up of one of the major things that I saw last week. And I think Friday was a good example of this. Friday the market was up, but I think a lot of people were actually saying, "Hey, well, my stocks aren't up, but the market's up." It really depends. And even though Friday was an up day, the groups that we're seeing, that were rallying were more the defensive names. So I think XLU. I'm going to bring up an XLU chart in a minute, but this SPLV. And if you're not familiar with these two ETFs, you could just Google SPLV or USMV. But they've been taking in the assets. Equity ETFs, U.S. equity ETFs took in $3.9 billion, but a lot of it was the defensive stuff that is seeing. So you can see utilities right here on top of the list, which does not cover the assets for USMV. This is $1.1 billion. You put this together with utilities and healthcare, and that's your whole inflows. So it's really misleading. So, and I've been talking about this too. When you look at the S&P chart, you're really not going to see what the hell's going on in terms of riskiness. But same thing when somebody puts out a number and they're like, oh yeah, equity ETFs saw $3.9 billion of inflows last week. Where is the question? And it's not in, industrials, financials, technology, and REITs. All were outflows last week. So it's really there's been new money being put to work, or I should say being rotated around. But no, actually the net number was a $3.9 billion inflow. So, but it's really, the money has been going regardless of last week. If you thought that they were making some type of headway in terms of trade deal, they were still, what they were buying was not tech and industrials and financials. They were buying, they were buying all the defensive names last week and what's known as minimum and low volatility equities. Again, that's USMV and SPLV, those two ETFs. Saw a lot of inflows. And the other thing that was pretty interesting last week is for the second week in a row, international ETFs are actually seeing more inflows than the U.S. So I think people are possibly thinking that that's undervalued, I'll say. But so let me just bring up an XLU chart, and then we'll go over some of the wreckage today and the higher beta stuff. But I do like the chart of XLU, and you can kind of pick this apart with individual names. But I think XLU is trying to break out. It got hit last week on that PCG stuff, and also ED. Con Ed having, I believe there was a secondary last week for this name. But if you look at a couple of these names, a lot of these names like Dominion. What's the other one that's on the 52-week highs? And look at NEE. This is NextEra Energy. Whew. So there are names in here, but your overall positioning, because even if you're diversified, today was still painful because things are just moving much faster to the downside right now. So let's go over that a little bit today. Let me bring up an S&P chart. I just don't know if we're really going to find anything. I've been saying this now for weeks that I don't know if I'm really going to be able to tell you that, if we're going to bounce off this support, again, it really depends on what sectors are going to lead. Unless you're just trading the S&P. If you're just trading the S&P, then it's a different story. But there's a whole bunch of different areas. And again, finally, if you tune on the TV financial media, now they're finally talking about basically what's going on underneath the hood, which is value's been outperforming, and I showed that chart before. It's not looking at this S&P chart is really not going to tell you. So, if you're just trading the indices, then you need to focus on this, then and on the technicals here. But this was a little bit different. In the Nasdaq today, everything got sold. So down 3.2%. You'll find a lot of names are taking out the October lows. I had a couple traders ask about, do I think we bounce off the October lows? I wouldn't hang my hat on that personally, because a lot of names are through. It all depends on the name. Like this was, I think, one of the darlings of the market the last couple of years. Salesforce breaking through, Nvidia has broken through. So there's been a lot of puts being bought in the last couple of days in Microsoft, which could be the next name to drop if it doesn't hold that 200-day moving average. So Boeing is another name that's been a darling of the bull market that's basically got taken out. There is some support here, but this is a major break of the 200-day moving average. So there's not a lot if you're a bull, not a lot to really kind of hang your hat on. This is what I put together in my weekend newsletter. I'm happy to say that I was not actively shorting today. Why wasn't I actively shorting today? Because I think the sentiment is too low. And I'm okay to, I'm not ashamed to admit that. I had a whole section on, or just paragraph, the fear and greed is a 10. I can't do it. I can't short when we're that washed out. Now, I think, seeing the application enterprise infrastructure software group just annihilated today, I don't know where that leaves us other than just another group that was completely washed out. And you can see IGV, which has been a great trend for the last couple of years, get smashed. So this is going to take more time. I mean, I didn't do a ton of trading today, to be honest, because this is just moving a little bit too fast. I think to really say, okay, I want to press to the short side, because this happened all basically in the first hour. There was follow through, obviously. I also think it's being a little bit too dramatic, in my opinion, too. Basically by 10:30, just to put this in perspective, right? If you caught it on the open, if you got short on the open, or if you were short going into today, congratulations. But here's where we went, right? I mean, you could have got a chance here to reshort, but I mean, the majority of the move is happening in the first hour. It's just so fast. Now we deteriorated and went down, like, I guess another third of the way down here in this particular name, or this particular ETF. But again, this is software. IGV is basically software. The FANG stocks also got hit pretty hard today. They were down 5% as well. But even besides the tech, if you look at overall growth itself, there's a lot of damage there too. If you look at the real, like I'm looking at XHE right now, which is healthcare equipment. I mean, that was also down 4% as well. So I don't think this is just tech that's going on here. The semis were down another 4%. SMH, the biotech ETF was down over 3% today. So this is not, I think, just tech. I think this is other things going on here. So I'm gonna kind of wait until things just wash themselves out a little bit. I've been trying to kind of sit on my hands as much as possible. I mean, I went over charts this weekend, and I put some setups. We talked about last week the casino names, right? Seeing a lot of option activity. So I thought today's option activity was not great. and on the call side, a lot of puts being bought. They've been continuously going after Twilio and a couple names in this space. So finally, they won on Twilio. The last couple days, they've been buying puts, down 13.7% today. So really got hammered. A few other names they've been going after in this space too. I think Autodesk was another name that they bought some puts in the last couple days. But I mean, this group just got absolutely annihilated today. But yeah, so Friday's option activity, even though it looked like some nice quality signals, like win was something that we saw at the end of the day, it's down 3% today. So you really, I'll be the first to come out and say it because I see these guys, I see them right now on CNBC, the ponytail guys, they're every day talking about option activity. If it's not going to work, then maybe you shouldn't talk about it so much. I'll be the first to come out and say that. I mean, win calls. The trade looked great. Las Vegas Sands were bought last week. Now, they may still work, but if you bought those on Friday, you're annihilated. For option trading, and even if it's a little bit longer. Edwards was another one that we saw a quality trade in. That was down 3.7%. So I would love it if these guys who just advocate option flow, and again, I look at this because I think it does help. It does give some ideas, but the guys who are just advocating option flow, you got to come out and say like, "Oh my God, that was real. That really didn't work." Every once in a while, you have to have some integrity than just to talk about the next one every day. Or maybe that system's not working for you. It's okay. It's okay to admit when these things don't work. PayPal. We saw a lot of PayPal calls last week. It looks like they rolled some calls. Because again, if it's not working. That's what the definition of insanity, right? Is to do the same thing over and over and over, even if it's not working. So, PayPal last week saw some big calls, down 5.8%. And I heard people talking about PayPal today. Yes, they rolled their calls to try to make it work. I've seen this before, and I've seen sometimes it works, sometimes it doesn't work. So they rolled, it looked like they were in the December 92.5 calls. They sold those today for 29 cents, and they got into the December 90 calls. So, I mean, I've seen somebody do this before in EA. Over and over and over, they rolled. And look at where EA is. Now, eventually, they gave up and they sold the longer dated calls in EA. But, it's tough. These guys are not going to always be right. And a lot of the option flow that we're seeing, even though I mentioned one name, MDB, saw some calls last week. Look at this thing. It's down 11.6%. So really making your own decisions about the market, I think, is much better than just blindly following this stuff. And because again, if it's causing that much pain, I will rely on it less and less. And so I'm not going to tell you that, oh, well, today wasn't great option flow. I mean, the option flow last week, there was, I thought, some really, high quality, pretty decent buying going on. But again, a lot of these funds that are buying this stuff are getting run over. So the whole thing is to try to avoid getting run over as well and to live to fight another day. So again, this video is completely for information purposes only, but I try to be as transparent. I mean, I took a one lot on this thing on Friday because that's all I wanted to risk was $700. And I bought the January, I think it was January, was it? Let me see. February. And the thing went down 50%. One lot, $700 down to 300. So, that's the type of, unfortunately, that's just what it is. And that's a failed breakout that somebody apparently were buying calls into this. Now, there was a little bit of puts that went up too, but the calls were a bigger order. But it's tough. And the best I could say right now is when I see these types of moves, I just decide to take on a little bit less risk. I need to see some type of confirmation for me to take more risk. So I'll just sit and kind of wait for that to take place. One person that I like a lot that I see on Twitter is Joe Fahmy. He wrote a nice piece for, I think it was Yahoo Finance that I saw, and he was stating that, one of the things he was saying was trade less when this stuff is going on, when the market is moving like this. So I'm not going to tell you I shorted the hell out of everything today. I don't like shorting into when the sentiment is this low. I think the fear and greed is probably back in the single digits. One thing that was alarming to me that I did not like is the VIX, only at a 20. So that tells me that if the VIX isn't screaming higher, I would rather have it be screaming higher than do this, which is basically nothing. That's not going to help you, at the end of the day, to see that the VIX was only up is only up to 20. I would want to see that. I would want to see a little bit more panic and it more washed out. I don't think we're completely washed out yet. So that's it for today's video. 20-minute video. So sorry to go on, but there's a lot to really think about, and I think preservation of capital is important. I talked about BABA last week. I added small to that. Was one thing that I did today. I added small to it. It hung in there all the way to the very end of the day. So it's right at my stop price, which kind of caught me a little bit. It was holding in here pretty well up until about an hour to go. So I'm okay with giving it one more day, and if it does break, I'll be out of my February position. But it is tough when everything gets smashed like this. So for now, I'm still on this one, and that's about it. So thanks for watching tonight's video. Have a great day. See you tomorrow.